Okay, everyone, welcome to the live stream. Let me know if you guys can hear me, and we'll let people kind of join in, and then I'm going to get started. Just leave a comment if you guys can hear me okay. Okay, we got lots to talk about today. And obviously, I think everyone knows why I'm doing the live stream today. So I want to go through everything that I see in the charts and kind of how we closed. Because there's lots to go through. Nothing's definitive, of course. Everything that I'm pointing out, it doesn't have to work that way. But we have a lot of signs right now that there is some more selling, let's just put it that way, coming in the near future, probably tomorrow. I'm expecting a gap down tomorrow, and it's likely going to be a relatively big one, but just a gap down, basically. So, guys, if you guys are new, just leave me a thumbs up as you come in. I do appreciate that. I don't know exactly how the thumbs up works, but apparently the more thumbs up, YouTube thinks this is good content. And so they try to tell more people about it. My channel's never going to be a huge channel. Just the nature of this kind of content, it's like reading a dictionary. My channel's, it's very technical and mathematical, and it's just not that entertaining, I would suspect. But, this is more of a channel about information and actionable information. Take the money that you make on these trades and go entertain yourself. That's what I would say. All right, let's get into some of these charts, guys. If you guys are new and you're just coming in, as I go through what I'm talking about today, just know that I have a technical analysis course that I put out there for everyone, and I haven't touched the price. I just kept it at 99 bucks. I didn't want to put it out there for free because it took me a while to put that thing together. So and it's worth something. It's definitely worth a lot more than the 99 bucks. So check that out though, because I think you're gonna get a lot of information from that, and it's well worth it. So if you guys haven't taken that course, take the course. It'll supplement my daily videos. You'll have a better understanding as I'm walking through these daily videos and these live streams. You'll pick up the concepts quicker. You'll understand. You'll see it in the charts. And the more you practice, then the more you can do it yourself. Because one day I'm not going to put these videos out. Eventually I'm just going to get bored of this and not do the videos. And you're going to want to have this as a skill set and not just follow me. So check the course out, and its link is in the description of pretty much most of my videos. So, and then as I'm going through these on a daily basis, you'll learn, and you'll be able to start to pick up these trade concepts and find your own trade ideas. Okay, enough of that. Let's get right into it. Okay, so I'm going to go through kind of what I'm seeing right now and just the reason why I wanted to do this live stream. And then I'll probably spend a little bit of time looking at individual trade ideas or stock picks that you guys have. So if you want me to look at something, leave a comment. Just leave a comment right there, and I will do my best to get to it. All right, so crude futures, that's what I have up. I was kind of scanning around at the end of the market today. I'm pretty loaded short, basically. I saw the market starting to crash and sell off and reverse, and I just loaded up on shorts. So I bought some volatility with the VXX. That was working out nicely, and just in general. So oil futures uptrend line right here, okay? We're looking at an hourly chart here. If I go to the daily, it looks like that. But the hourly chart, nice clean trend line. And, we have a breakdown. So there's a sell signal. And, I'm a believer of the inflation trade. I think that the inflation trade is actually going to be the larger trending trade over the next decade. I'm a believer of that. I see it in, I see it in the charts when it comes to like ag commodities and all that. But it's going to go in fits and starts. You're going to have big pullbacks, and then it'll continue. And that's what I think. Again, I've talked about this in my last live stream, how I think the Fed, they're trying to walk the market down. They're trying to get the market to come down. They're trying to get oil to come down. This is a main thing they're trying to get to come down is oil. And they're really trying to take some heat off of these inflation numbers so that, politically it looks better if it's not as high. So they're really that's what they're trying to do. And so far the market's taken the hit, so I think the market sells off until the Fed changes course. So there's your breakdown in oil futures. So I would say we're probably heading down to there, but that's not the main thing I wanted to point out. I want to also point out this one, XLK. All right, XLK is another technology sector, and it's just another look, kind of a different way to look at tech. So you can use QQQ, but also, you check XLK. So QQQ started to break down. That's usually the one I like to trade, and I'm short that thing. But this one, XLK, was still kind of holding this uptrend line. And there's your breakdown right there. See that sell signal? So you have, you got 1, 2, 3, 4 tags of support, and boom, sell signal breakdown. That's that's a good sell signal, because here's the thing. It's a clean drop through the trend line, closing at the lows. See the volume? I got volume kind of marked. See that volume right there? So that on above average volume. So you have a break of trend above average volume. You've got negative divergence. Let me reset this. I don't know why this looks all funny. You've got negative divergence in the momentum indicators. Everything you need, all right? Every single thing that I could find, at least on my strategy, is pointing to a breakdown in lower prices. So now you have the 200-day right below. There's the 200-day. I think we're probably going to gap down to the 200-day, which is down there at 154.34. And we should get some dip buyers, and you should get a reaction at least at that 200-day. All right, but that doesn't mean that it's not a sell the rip. All right, so if you're going to rally off the 200, you're going to want to look at areas to sell the rip. All right, because I think we're just likely going to do that. All right, we're downtrending over time. So that's the thing. The point I'm trying to make is XOK. We now have a sell signal. Another one to look at that I was kind of scanning today. These FAANG stocks. Apple. All right, there's a break right below my this trend line that I was watching, which is about 167.80. We had a break. We had a break yesterday too, but look what they tried to do. Today, they ramped it up. We were up here at one point in time. Everything looked rosy, and then boom, sold off, closing at a new low. I mean, just a rope-a-dope basically. Anybody, this is, if you bought the dip, you thought you were in the money for a while, and then boom, they smashed it down. So that one's broken. Microsoft, same thing. That one's broken. So Microsoft, look, here's your former resistance right there, and it's about 306. And a little bit of a battle for the last couple days, but I mean, look at these wicks. Sell, sell, and today, same thing, sell, closing at the lows. So that one's broken. That should head down here. 200-day, probably get a bounce at the 200-day, but should head down to about 284. And look, if Microsoft and Apple are selling off, the market's not going up. Might not go down, but it's not going up. And there's other things that I'm seeing that are, reason why it should sell down. Here's the SPY. Oh, and I want to point out the futures as well. But here's the SPY S&P 500. So this red trend line I have marked out, this comes off your 2008 or 9 lows. This is the Great Recession lows. And on the weekly chart, you can see that we're basically this has been support, for the entire bull market. Now, this is where the Fed got involved. In 2018, the Fed was hiking rates. They broke the trend, and then they pumped in 2019. Then COVID hit, then they pumped again. This is all Fed manipulation to try to get the market back up. The natural trend has been broken. They did succeed in getting it back above trend, and it had been holding for all of 21. And you can see here on the weekly, we've broken. We're back below again. Okay, we're now. Tomorrow is Friday, so we have to see how tomorrow closes. But on the daily chart, clear breakdown, and I haven't seen a daily. Look, I mean, we've got some wicks here, but nothing that's a huge close, and this is probably the lowest close below this trend line that we've had. See the after hours? I mean, it's down a little bit more in the after hours. So the point is that this looks like a sell signal in the S&P 500. Okay, so I've got weakness in tech. I've got weakness in the S&P 500. I also want to point out the futures. So in my morning video, I talked about this, how the futures in the Nasdaq had broken down. Here's your NQ futures. All right, so we've had a sell signal in tech for a while. All right, I've been short tech basically since up here, since January 4th. And that was looked like a good entry, and sure enough, it's played out for a good amount of gains. But so we had a sell signal in the Nasdaq futures on this blue trend line. This is pretty much this is going back to September 2020, so more than a year's worth of time. Breaking trend, but the SPY futures, the ES mini futures, hadn't really broken trend yet. So that was the one thing I said, okay, maybe we want to hold here for a little while, get a little bit of a rally in tech, and then break, after that little rally fizzles out, then we'll break. And that's what I said, that could be a possibility, but we didn't get that. We got a break down in the ES S&P futures today. So there's a sell signal there. So you see, I was watching that trend line, boom, sell signal. Now we're at the 200-day. So we'll see how that trades throughout the night. I suspect it'll trade down to that 200-day. Probably undercut it, whip around. It'll probably grind around on that 200-day and we'll open somewhere down there. But we have a sell signal. So any kind of rally just gives you an opportunity for short entries or additions, in my opinion. So we have breaks of trends in the futures, breaks and trends in both tech indices. Another one that was interesting I was looking at was the financials today. So they were selling off. Now they closed basically at support. Let me get rid of that. Closed right there at 38.90, but they were weak today. And when you see when you see the financials have been strong somewhat recently. Obviously, I shorted it right there. You can go back and look at that video and how I talked about that. But I got short there. That's played out nicely. We're at support. I think we're going lower, but we could bounce here in the financials. But ultimately, I think we're going lower because I'm seeing weakness in financials. I'm seeing weakness in tech, weakness in the futures. Gold's looking relatively strong. So here's gold. Now, gold should catch a fear trade, right? A lot of people think that that gold sells off when the market sells off, and sometimes that's true if you have like a liquidity event where it's just out of the blue. But when people are looking for protection, then they'll buy gold. Now, gold wasn't up today, but it was basically flat. So relative strength in gold. To me, this looks like it's flagging, all right? If I look at the hourly chart, this looks like a bull flag, right? I'm kind of flagging out, and boom, we're going to break higher. That's what I think is going to happen. I've talked about gold for a while, but I'm seeing relative strength in gold. Bonds, they were buying bonds today a little bit. Bonds up, so nothing crazy, but definitely some people rushing into bonds for safety. All right, so what else do we need to look at in general? I'm just trying to make a case here that I think we got big technical breakdowns in some major indices that tell me that we're going lower. Some of these shorts that I have on, I've got this one, IYR. This is real estate. It's a real estate ETF. I have a larger than normal position in this just because it's, it's kind of a slow moving thing. But look at this. Here's your 2020 lows, support all through here. I've got that circled out. Building negative divergence for a while. There it is on the RSI. And so, divergent high. that was a divergent high. There's one. There's one. All right. I wasn't interested in shorting it just because it had negative divergence, but I was interested in shorting it when I saw this sell signal, which was right here on the January 18th, which is a break of the trend line. And, you know, two big impulsive selling candles ever since. We'll probably bounce here. We're at the 200-day. We're basically at my first support, 105.38. Probably get a little bit of a bounce. But the point that I'm seeing is, it doesn't matter now that it bounces as long, because I think there's a higher probability that it does this, We maybe do that, I don't know, something like that. But lower, all right? So those bounces should fail now that the technicals are set up. So I like that one. It's just another sector. It's a real estate sector. Again, this is all playing out based on the interest rates. And this is what the Fed wanted. The Fed is clearly trying to take some heat out of the market. Okay, what else? What else do I want to point out that really is trying to? Oh, this one, Qualcomm. We had So look, I've been shorting Qualcomm up here at resistance. This is where I liked it to short it at. It was a higher risk short because we hadn't broken any trendline supports, but we had clean and clear negative divergence. See that right there? This is dropping off the momentum, and yet the price keeps popping up, making new highs. Everybody feels great, at least, the dumb money, basically. They just see, oh, yeah, we're still holding higher prices every few days, and then it drops back, but it's hanging in there and nothing to worry about. That's basically what that price action does. But if you're looking at momentum indicators, which are forward indicators, then we saw the momentum dropping off. So now, boom, breakdown, sell signal right there. So if you didn't take it here, this is where I took it. And I traded it a couple times. I think I actually grabbed it here, covered it down here at the bottom, recycled back in at the top. But now, there's just no I'm not looking to cover this. All right, I'm short. We got a breakdown. So we should head down to here. 153.40, that's kind of your gap entry. Maybe they step in a little early. It's a pretty obvious gap. So we could get a bounce around there. I would expect a bounce around there. That bounce could bring us all the way up to here, 171. Maybe we retest this as resistance. It should get rejected, and we should run down to fill the gap. All right, so that's kind of the micro, that's how I see it kind of playing out. But if you're just trend trading it, or you want to just kind of set it and forget it, then I would just look, this is a sell signal, and I would just look for this to go down and fill the gap, 139.20. And that is a move from where we're at of about 16.5%. And that's really the trade that I have on that. There is some really good support on this one down here at 123.09. So that would be a final target, I believe, if we get down there. Well, I don't know. We'll see. There's a couple targets I have, and I've got it down here. There's another target. See this gap right here on this one? Long-term target could be down here at 94. That would definitely be my final target. All right, I wouldn't want to press my luck and go much lower than that. That's full-on bear market target all the way down there, so that's going to take time. Could take a year. I might be talking about this thing hitting its profit target a year from now. Who knows? But because that's a drop of 43%. All right. That looks good. C's. All right, look at that. So I talked about this one. They tried to make it look like it was going to hold up, but it wasn't even believable. When I say they, I'm just talking about market participants. There's people that think this thing is bullish. There's people that aren't looking at trend lines, and they're just generally bullish on this stock, and they want to buy it regardless of trends or any of that. So that's it. It's just the market, And then there's also market makers and algos that look to try to play games. They try to take positions, but in order to take large positions, they need to kind of run some games in order to do it. But C's, look, breaking down, more selling today. So at a minimum, let's see, we've got some support here. I could probably mark some of these out now that we're starting to break right in there. See that? resistance, resistance. This is kind of chop zone, support. All right, so we should get a bounce right there at 57.75. We'll likely be right down there tomorrow, and we might trade right through it. We'll see. You know, if the market's really impulsively selling off, we might just go right through this. Otherwise, probably get a little bounce and then break. But we should break that, right? You're not going to likely run a big uptrend like this coming off March 2020 lows and hit your very first support, and that's all she wrote. You know, I think it's more likely you're going to hit it, maybe you bounce, and then you break. So profit targets on this one, you know, could be down here, all the way right here at 36, about 37. All right, that's kind of your former high before the COVID hit. And so maybe, you know, the Fed pumped this market. So if they're taking the steam out, they might want to bring it back down to kind of where it was before the Fed pumped it back up. All right, that just logically makes sense. All right, Ford. All right, see that Ford? So again, we shorted it right up in here. It's already down about 15%. So it doesn't look like much because I use log scaling, but you know, if I pull the log scaling off, it, you know, looks like more. You know, we caught that position, we caught that short, perfect. Going back to log scaling again, we still have an uptrend, so we need to see that break. It's likely going to spend a couple days trying to hold that uptrend and then probably break. No, I did. Oh, you went heavy in SQs, triple Qs on Monday. I think you're in the money, right? I don't know. Look, I don't, you know, I can't tell you what to do. I can't give you any advice. Obviously, I'm not a financial advisor, but part of my course that I teach is money management. That's a huge part. It's not just about finding the trades. It's also about managing risk and money management, position sizing. I teach all those concepts in my course. So take the course if you haven't done so, because it, you know, even if you go too heavy in one position, even if you're right, there's going to be shakeout moves along the way that could bust you out, you know, and then you don't even have the opportunity to be right because they bust you out halfway through. So be careful about that, about going too heavy into any one thing. All right. I'm trying to think if there's anything else I really want to point out before I get into your guys's things you guys want me to look at. Yeah, see these Rio and Vale. I'd pull the plug on these. We hit our these are the two profit levels I've had on Vale. Somebody asked me about that, and you know, it's not uncommon to see kind of little overshoots where you kind of pop above it and stuff, but usually you're going to get a pullback or a reaction. So I think this run I think is probably done, or at least before we see a meaningful pullback. I took my profit on this, and it was a good trade. All right, guys. Let me just see if there's anything else that's important to look at before I move on. Look at XHB. This is your Homebuilders ETF. I think this one has like Home Depot and stuff in it too. But look, there's your uptrend line the one that I had. A little false breakdown, and then there's your sell signal. I had it circled, and down she goes. It's becoming pretty obvious to everyone now that we're kind of crashing or having a downtrend. So just about that time is when we're going to get our first rally. I think there's a little bit more flush out kind of panic selling that needs to come out. And the reason why I think that, look at the VIX. Well, here, this is the VXX, but if we look at the VIX, all right, the VIX is up at 25, but, you know, we're not seeing a huge spike yet in the VIX. I think we need to get up to here, you know, about 35 or so. And so, yeah, I'm looking for higher VIX. I'm looking, you know, I took some VXX today. If we start to spike, probably tomorrow, I might cover that. So, but Yeah. So yeah, VXX I think's going higher. You know, probably up to 24.89 before we get some sort of a pullback. Oh yeah, IWM. This is the other big one. So I want to point this one out, and then I'll get on to the picks. So small caps, guys, just another thing to build my case. I don't see anything bullish in this chart, and I don't see anything bullish in the market in general right now. Of course, you know, I have a tendency to look for shorts. They usually can be easier trades if you get them because they just usually just crash right down. You get your money quick. But here's IWM. All right, big sideways range right here in IWM. And this is going back to January 2021, so over a year. Now, we did have one false breakout up here. That was a bull trap. And when we got that bull trap came with negative divergence. So see the momentum? There's your breakout right there. But see, that was lower momentum than the former high. So negative divergence, breakout with negative divergence has a higher probability of failing. It did fail. And once it failed, it's very common to go to the bottom of the range. And sure enough, right to the bottom of the range right there. Held, you know, it bounced again, came back to the range, but here is a sell signal. All right, so I gave it a benefit of the doubt at 205.05, but boom, there's a sell signal. So we've got a sell signal in small caps, tech, S&P 500, the futures. All right, so just across the board, sell signals. And so, all right, we're probably heading down to 192.80. Likely get a small reaction there, some sort of a bounce. But then heading down to 169.57. Yeah, that's pretty good support. All right, that was former resistance before COVID. So I think that's a common theme. I think we're going to see a lot of these stocks sell down to their pre-COVID levels. All right, and that would be, here's your COVID crash. So your pre-COVID levels would have been here. So that's likely where the Fed's going to come out and start to walk back their hawkish rhetoric. All right, they haven't done anything. It's all just talk right now. So it's rhetoric basically, but likely we're going to work our way lower, and yeah, they'll start to walk back. They're probably still going to hike rates, but they'll probably walk back, you know, some of the hawkishness. Like, we're not going to sell, you know, reduce our bond buy. You know, they'll probably talk about, like, they're not going to sell their reduce their balance sheet. All right, they might just let that roll off or something, or just keep it where it's at for now because markets are the economy is looking weak. That's the stuff that I'll expect to hear if and when we get down here. All right, guys. Now, leave me a thumbs up, guys. We've got 120 people in here, 54 likes. Give me a thumbs up. Again, if you guys haven't taken the course, take the course. It's a $99 investment. That's cheap, all right? And it's got some good information. I know I've gotten a lot of positive feedback from people that have taken it, and it will help you follow along in these videos. Okay, I'm going to go through a couple individual picks, and then I'm going to go ahead and wrap up, guys. All right, we'll just start at the top. BYND. I mean, this thing's already taken a bath. Bullish divergence right there. Some of these ones that have already sold down, like these ARK Invest stocks, man, they're kind of looking bullish. I do have to say, I don't see a buy signal on them yet, but I'm watching them. You know, that's why I keep trying to cover Roku, and I'm kind of looking at these stocks, and they're looking bullish. So, and because the reason is they've already crashed. You know, I mean, I think we're seeing the generals crash now. We're seeing, you know, this thing's down 74% from the high, and even more from here. But and while this was crashing down 74%, we didn't see any. You know, everybody was crowding into Apple and Microsoft and the FAANGs. So now it looks to me like the generals, you know, those FAANG stocks, they're now going to crash or, you know, come down. And with them comes the market, basically. But that doesn't mean these things might be bombed out. They might be sold out. So they're likely, they might kind of chop around, and we'll keep an eye out for buy signals. But I wouldn't just go long on it yet, but you could look for, you know, I'd probably take an hourly chart and just narrow it down to maybe this kind of, can't quite make anything great there. Let's go here, right there. And maybe wait for a breakout above that for your buy signal. That's probably how I would treat it. You have a setup with the bullish divergence. You just don't have that buy signal. So let it work itself out, and then when the buy signal comes, that's when you take it, in my opinion. All right. Well, Malik, if you've been loading puts on Qs for weeks, then you've been making money for the week, you know, a few weeks. And again, just going to the Qs, guys, I talked about it, you know, and, you know, when I talk about something, it doesn't play, it's not going to work every single day, you know, but in general, I'm looking for it to work. And this chart's become a mess. But there's your bearish engulfing candle, right? Remember me talking about that, bringing that up, saying this is probably the top. I think I put out a video during this week saying I think this is the top of the market. So far, I think that call has been right. But, you know, so bearish engulfing, we're starting to break, you know, on the weekly. Everything's starting to look pretty bearish. So, you know, don't expect this selling to be finished. Let's just put it that way. All right. CPNG. I have no idea what that one is. I don't know what this one is, but Coupang, it's a Chinese stock, most likely. The Chinese stocks are kind of interesting. They look kind of bullish. This one doesn't. This one doesn't look bullish to me though. This is just down. All right, look, new lows in the momentum. So there's your former low area. We're making new lows in price, new lows in momentum. I just see a downtrend. You know, you're probably going to see some bullish. Not even really. Yeah, a little bit of bullish divergence just now showing up on the hourly. So what I would do on this, I wouldn't short this thing because it's already like, I don't short things that are crashed. I short things when I try to short things when they're rallying, and right when that rally fizzles out, that's when I try to get short. This is already crashed, and you can see here on the hourly, you got a slight bullish divergence. See it right there building? But, you know, you just keep going down, you're going to burn through that divergence and it's going to look like that. So don't, you know, but maybe mark out, yeah, I don't know. You don't have a great trend line, but I'd say something like that. Wait for a break. You know, you're probably going to want to wait for a break above like this 22 area or something, but I wouldn't short it and I wouldn't go long it. I'd let that thing just kind of work itself out, let the chart become more clear. I'm all in cash now. This David says he's all in cash. Any shorts you would be entering now? Well, I'm fully short, except for the gold miners. I've got those gold miners still look good. They had a monster day yesterday. A little bit of a resting period, kind of flagging action today in most of them, but they all still look pretty constructive. So I think gold's going to rally as the market sells off, as a fear, you know, basically as a fear trade. That's what it looks like. But besides that, like I'm short tech, you know, I'm short Lyft and Qualcomm, and I'm short IYR. What else am I short? Ford. I've got about 10 different shorts. I've talked about them all on my videos, and all the setups that I really like, I short those. You know, I take those trades. Part of the reason, that's kind of why I can talk with confidence on a lot of these trades, is because my money's on them. So I wouldn't take a trade I wasn't, you know, if I'm not fully confident in it, I don't put my money in it, or I'll let you know, like I've got a little bit, it's a starter short, I'm not fully confident, but you know, these trades that I'm talking about, I'm taking them myself. So XOP, well, look, The futures in oil just broke, so this likely broke too. All right, I don't have it charted out, but I can see it. It's basically something like, I don't know, I guess it's like that. Right in there with a sell signal. Looks like the, or sorry, here's the daily, but there's your sell signal in XOP. I'd get out of oil. In my, that's what I would do. Oil's been a monster, but I'd probably want to get out. That's what I would do, at least for a pullback. I like oil longer term. I think oil's probably started a bull market longer term, but again, the Fed's trying to take some pressure off of this. So where's oil go? Well, for XOP, there's a nice level right there. 72.65. Okay, moving on. Gold has a, what, negative divergence? Yeah, it might on the 1 hour chart. Let me look. Gold bullion. Yeah, it does. And that's the thing. We could see it looks like it's flagging to me. All right, this looks like a bull flag, but that was a divergent high right there on the hourly. But again, that's just the hourly, all right? So, yeah, maybe we get a pullback. Maybe it even pulls all the way back down to here, 1790. That could happen. Bigger picture, gold's in a bull market, all right? Look, until I see a break of this trend line. Now, if we get a break of this, then it's going to start changing my thoughts on that. I'm going to say, okay, well, we're starting to break the bull market trend, and now we'll look for areas to lighten up on some of these positions, but I don't see that break. And gold's already been correcting. Here's your highs. It's not like gold is coming off of the highs and just about ready to crash. Gold has already had a pretty good, 20%, 18.5%. That's pretty good for gold bullion. So I think, to me it looks bullish. All right. Snap. Snap, has it filled that gap yet? It's going to fill that gap. All right. Right down there. 29.33. See that gap right there? It's obvious now, right? Look at the post market down 1.5%. Burning through the divergence on the RSI. Let me expand that. Well, not quite burning through it, but very close. And it's pretty much burning through it. So I think we're going to run down and fill that gap. We'll probably put in bullish divergence down here, so it's probably going to become a buy here pretty soon. We could be going lower though. You don't know. There could be another level down here at 2087. Let me mark that out. But that gap is a pretty obvious place where you're going to likely get a reaction. All right, guys, right in there. See that support right there? It was resistance. They stepped in early there, but resistance. So I think we're going to get a reaction to the gap, though they're probably going to not fill the gap and bounce. Anytime I have a gap, I always like to cover. If I'm short, I like to cover before the gap fills. Or another way you can do it is set a stop loss and just trail that stop loss down, because if it runs down, it could just overshoot the gap. All right, there's two ways it can play out. Either way, a trailing stop should get you out with, most of the profit. All right, so that one, we talked about this island cluster top up here. So again, these trades are already, these trades are done basically. These are not trades I'm really interested in anymore. Yeah, Roku. All right, so yeah, again, I was looking for that breakout and it failed today. So post market down 5%. Is that right? Yeah. I exited all my longs. I talked about this as a potential bullish setup, and I took a stab at it intraday. It was kind of going good, but then it started to get soft, and I was like, yeah, I'm out of there. Especially when I saw the market. So I got out of this thing, and yeah, I mean, I don't want to be long any kind of tech stocks or momentum stocks when the market is flashing, you know, major sell signals. All right, these will be longs. Maybe it's just, maybe we're early. We might chop. Here's what is probably going to happen. We're probably going to chop around, make it kind of drop like this, and then recover. Maybe something like that. I don't like it anymore. I already covered Vale, Baba. Yeah, Baba's one that I like. I think, did that show strength today? Yeah, see relative strength. Still looks good. Right at support, all right? So 130.40. Post market, basically right at support. So still looks good on that one. This is a Chinese stock. The American market has the sell signals. The Chinese, this is a Chinese stock, so it's listed on the indices, but this might trade a little bit differently. Anything doing good? Yeah, I mean, there's some probably. I don't know. How did Coca-Cola do today? Probably sold off, I would think. Yep, see that's down. Costco. We're just looking at some defensive things. Costco has a sell signal. I talked about that, but that's a sell signal and a breakdown. Negative divergence. Costco's got a ways to go. Probably all the way down to this 314. When we get down here, we're going to start looking. We're going to start looking for bullish setups. Start looking for loading up on long-term bullish setups. I don't want to buy bullish. I don't want to be loaded up long, way up here. I want to buy it when everybody's bombed out and nobody wants it, and it's cheap. All right, guys. A couple more, and then I'm going to wrap up. Socks. That's a good one because that's your semis. Yeah, I'm short. What? Broadcom. That's another one I'm short. I'm short Qualcomm. Broadcom. This one's got a little bit of support right here. It looks like at about 470.62. But it's going to go. Most likely it's going to break. Big negative divergence. See, these divergences, they do work, all right? They're not an indicator of like, okay, short it now because we have negative divergence. And that's why I like on my videos when I point out, I'll talk about negative divergence day in and day out on something that I'm looking to short. And I bring it up because I don't want it to, I don't want it to get past me, but and then people say negative divergence doesn't work. The stock's up, Usually people say that when it's like this. I'll be talking about negative divergence all through here, and we're getting ripping days like this, and negative divergence doesn't work. Then it sells down and it rips again, and they just continue to talk about how I'm wrong and the negative divergence doesn't work. And that's because my negative divergence isn't telling me to short it right here. It's telling me to be on the lookout for a short and to short it, basically short it right there. All right. All right. Just a couple more, guys, and I'm going to wrap up. Yeah, that's called a reversal, Angelica. That's called a bull trap or a catch a falling knife trade. That's where I think we're at, is catch a falling knife. So that's the same thing as sell the rip, right? So it's not buy the dip, because if you're buying the dip, you're catching a falling knife. All right, you get cut basically. Yep, still short GME. I am definitely still short GME. No reason to not be short GME. All right, this is a pure momentum play, and it's all, this stock has no fundamentals behind it. It's all just momentum, and it got pumped, and that pump is done as far as I can tell. So I'm still looking for my target down here at 44. Then it could go a lot lower, but that's what I'm looking for at least right now. Why would I not want to continue to remain short? We just keep making lower lows. We're just going down. As more and more people realize that this is going down, this is going to get more impulsive, and it's going to start putting in bigger red candles, and it's going to get down there pretty quick, I think. The Fed can hike rates anytime they want. They can announce an emergency hike. They're not going to, FL. That very, very low probability, but they can hike anytime they want. In 2018, if you were trading the markets back then, the Fed was hiking rates and the stocks crashed over Christmas Eve. And they came out the next day with an emergency meeting and said they're not going to hike rates anymore. So they can do whatever they want, whenever they want. But they don't typically spook the market. They forecast what they're going to do in advance. And that's why I think this market's going to continue to sell down until we start to hear the Fed come out and forecast that, okay, it's going to, ease off. Because all they've done is forecast we're going to hike. We're going to be hawks. We have to fight inflation. So, what else do I need to cover, guys? I've pretty much covered it all. Let's look at Google real quick. I don't know if I pointed that one out. These are all things I look at throughout the day. Look, Google right at support. Okay. There it is, right at support. I think it's going to go. I think it's going to go with a gap down tomorrow. That's a micro call, so it's kind of hard to be accurate, but that's what I think is going to happen. So look, you got support, rally. So we hit it here. They bounced it, and we're right back down there. I don't think we're going to bounce again. I think we're going to break, especially with all those sell signals across the board. So I think we'll gap down tomorrow in Google. We're down in the after hours. So in the after hours, we're already below it. We're down here at this level. That'll probably get worse into the night, and we're going to gap down and break support. So I think, look for that. That's just another indication that, okay, another one of those FAANGs just broke support. Apple broke, Microsoft broke. If Google goes, that's all she wrote. And then Amazon, look at this. This is really important. That's why I like to do these live streams sometimes, especially on big days, because it's just impossible for me to put out a 40-minute video to cover everything. People don't watch it. They get bored. Amazon. All right. The big picture I want you to look at on the weekly chart, going back to 2008. All right. Support, support, support. All right. I got 3 tags of that bull market trend line on Amazon going back to 2008. Big topping pattern or Wyckoff distribution. It's a topping pattern, to me. And when I go to the, let's look at here. Let me refresh this. I don't know why these do that. This topping pattern has come with big negative divergence. See that? Dropping off. And it's just been chopping around. Negative divergence, had a false breakout with negative divergence, high probability of failing. There's another false breakout with negative divergence, high probability of failing. Okay, and look where we're at on the trend line right there. See the after hours down 1% and 1.3%. So if they don't step in and save this thing tomorrow, then we're going to gap down below that trend line and, break the bull market trend in Amazon. I don't think we broke it yet. I think we broke it in the after hours, but we don't take the after hours, I don't take the after hours into my analysis consideration. I need to see how the market participants treat a stock or an indice when there's liquidity and volume and the market's open at, 9 o'clock Eastern time. That's what we use for our analysis. Everything else is just kind of, fluff. So if we gap down tomorrow and sell off, the bull market in Amazon broke. All right, and this is a heavy hitter in the indices. So I don't know. I think maybe we started a bear market in general, but a few little things to kind of tighten up. But I think we've probably started a bear market, and we're early. If we're right on the bear market, we're early, which means that there's opportunity there. All right, guys. I'm gonna wrap up. Leave me a thumbs up. Check out the course. I'm serious about that. It's a good value, and I'll catch you guys tomorrow. Good luck.